Okay, here we're going to take a look at process costing, and we'll do this over several, 2 or 3 videos. When we talked before, we talked about job order costing. That is for businesses that have unique jobs. And so we allocate the costs by those unique jobs. This is used primarily either by companies that manufacture those unique products or if they provide specialized services. For those of you who are accounting majors, that might be a business that specializes in tax, doing income tax returns, or bookkeeping services for other client companies. So each company's tax return or each company's bookkeeping for that month is different from the next company and unique. And so services, not just manufacturing, but services also use a job order costing system. A process costing system is when everything is the same. So if we make orange juice, it's just going through a process. And when we get done, we have 500 gallons of orange juice, and some of it's going to this customer and some of it's going to that customer, but they're all the same gallons of orange juice. Okay? And so this kind of cost allocation, rather than allocating the cost to each job, we're allocating the cost to each part of the process that the product goes through. This screen here shows you the differences between job order costing system, the type of company that does those two, how the costs are accumulated, and the work in process inventory. With job order costing system, we have one general ledger account that's called work in process. Then we have a subsidiary ledger that it contains the individual job cost records, which we also call job cost sheets. So those job cost sheets are the subsidiary ledger. If I add up the balance of all the job cost sheets, it should equal the balance in the work in process account in the general ledger. With a process costing system, we have a separate work in process inventory account for each process or department. So if the product has to go through 3 different departments, we're going to have 3 different work in processes. We still have our materials, labor clearing, and overhead on the one side, and we still have just one finished goods on the other side. But in between them, we would have 3 work in process, 1 for each department. So direct materials, direct labor, and applied overhead would go into Department 1, and all the product that then transfers to the next department brings those costs with it, and those become the beginning balance of Department 2. Then in Department 2, we add more direct materials, more direct labor, more overhead. Then all the costs that go on, all the products that go on, the costs go with them into Department 3, and that becomes the beginning balance of Department 3's work in process. Then we add more direct materials, more direct labor, more overhead, and finally it's done. And those finished products has all that accumulated cost to them. That's what goes to finished goods. For record keeping, we keep a job cost sheet for each job under the job order costing system. For process costing instead, we keep a production cost report for each department, for each accounting period, which is typically a month. So at the end of every month, for each department, I'm going to make a process cost report. So if I have 3 departments, I got 3 work in process accounts, I got 3 production cost reports every month that have to be done. The timing of cost transfer, when each job is completed, that's when it is transferred to the next thing, which is finished goods. Here in the process costing system, it transfers from one department or process to the next one at the end of the accounting period. So at the end of January, everything that got completed in January transfers to the next department. And then at the end of February, it transfers from Department 2 to Department 3, etc. Whatever is finished, which may not be all of it. Here shows you an example of a company that makes puzzles, and they have two processes or two departments. Here's the assembly process, and there's direct materials, direct labor, and overhead applied to that work in process for the assembly process. And then we get the puzzles out. At that point, they have the picture glued onto the cardboard, but it's not cut into little puzzle pieces. So now those have to go on to the cutting process or cutting department, and more materials, more labor, more overhead will be added during that process. And finally, out comes the completed puzzles in a box, ready to go to finished goods. In this example, we're going to suppose that the company's production costs incurred to make 50,000 puzzles, and the cost per puzzle is calculated as below. What if we had $220,000 in the assembly department for the 50,000 puzzles? I'd take $220,000 divided by the 50,000 puzzles. That's $4.40 per puzzle in the assembly department. Then it goes on to cutting. Cutting, we don't have as much cost in there. Might take just as much time, but it's less cost. And so that's $45,000 divided by 50,000 puzzles is 90 cents per puzzle. If I add these total costs together, that's $265,000. And if I add these costs, it's $5.30. Or I can also take $265,000 divided by the 50,000 completed puzzles and say that, okay, each puzzle cost me $5.30. Now, some of those puzzles are going to go to Walmart, some of those puzzles are going to go to Dollar General, etc. And so this $5.30 that I know how much it cost me, I now know how much to charge to my customers. Okay, I can also compare this $5.30 to how much it cost me the last time to make 50,000 puzzles. You know, was it $5.20 and now it's gotten more expensive, or was it $5.40 and I've somehow saved some money? Companies use this process costing to determine, just like I say, to control costs. If it costs more or less this time to make those puzzles, then I need to investigate if I'm the manager. Okay? It also helps us sell the sales price. If it costs us $5.30 to make a puzzle, we're not going to sell it for $5.30 or even $5. We're going to have to sell it for enough to cover those $5.30 worth of cost plus some profit. Okay? Because making a profit is the number one goal of any for-profit business. So we need to calculate the account balances for our work in process inventory, and for that puzzle company, we have two of those, one for the assembly department, one for the cutting department. And we have one finished goods inventory, and we'll also have to do cost of goods sold. And of course, we'd still have the materials and overhead accounts to calculate out as well. Here's a picture that shows you the differences with job order costing. We had one work in process inventory. If we had 3 different jobs, we added the direct materials, direct labor, and overhead to each of those 3 jobs in the work in process account. Then If two of the jobs, number 27 and 28, got finished, then the total cost of job 27 and the total cost of job 28 got credited out of work in process and debited into finished goods inventory. And so here's our two completed jobs. And job number 29 is still sitting by itself in work in process as an ending balance because it didn't get finished. Now, in the finished goods inventory, if only one of those jobs, jobs 27, actually got shipped, sold, and shipped out to the customer, then we credited finished goods inventory and debited cost of goods sold for the total cost of job 27. Job 28 is finished. Its costs are still sitting in finished goods, and it hasn't been shipped yet. So it'll be the ending balance of the finished goods inventory. Now, for process costing, for this puzzle company, we have two departments, two processes, the assembly process, the cutting process. So that means we have two work in process accounts. We put in direct materials, direct labor, and overhead into the assembly department. The things that are finished with assembly, even though they're not finished puzzles yet, but they're finished with assembly, those things and the cost that went with them go into the cutting process. Now, the cutting process is going to have more direct material, direct labor, overhead gets added in to the cutting process. Okay? All the puzzles that are finished from the cutting process now can go to the distribution warehouse, and accounting-wise, we're going to credit that work in process and debit finished goods. And when the puzzles get sold, as they get sold, they get credited out of finished goods and debited into cost of goods sold. So if it costs me $5.30 for a puzzle and I sell 100 puzzles to ABC Company, I'm going to credit finished goods and debit cost of goods sold for 100 times $5.30, just $530. Now, it so happens that we have some of the puzzles are still in the assembly process. Some of them finished at the end of the month and went on to the cutting process, but some of the ones in assembly aren't done with the assembly part yet. And so they're still sitting in there. So I have the total production costs, all the direct materials, direct labor, overhead that came into the assembly has now got to be split, divvied up between the puzzles that finished in the assembly and went on to the cutting, and the puzzles that did not finish the assembly. Some of those costs belong to those particular units. So I have to divvy up those total production costs for this month into the ones that went on and the ones that stayed behind. And this just shows you a picture of that. Here's the total cost incurred during the period in the first department. And we have to divvy those up between the costs that are going to go on to Department 2, the costs that stay in Department 1, because those ones aren't complete enough to go on to Department 2 yet. So we have this thing called equivalent units of production that we're going to calculate. And this measures the amount of materials added to or the work done on the partially completed units during the period. And then we change those into terms of fully complete units of output. So if I have 4 units and they're half completed, well, that would be the same as like having 2 units that are fully complete. So my 4 units times 50% completion gives me 2 units that are fully complete. To recall, conversion costs are the sum of direct labor and overhead. Prime costs is our direct materials and direct labor. Conversion is direct labor